What's the vibes, family? How you guys doing? This is going to be another price action video. So I advise that you get your notes and let's get right into it. It's going to be a very quick one also, and I'll be talking about how to spot reversals using SMT divergence. Now, you would agree with me that the only thing we really need to know, like the thing you need to know on the highest degree of hierarchies when it comes to understanding the forex market is understanding when the market turns, is understanding when do we shift from buy side to sell side. There's only two directions we have. We only have buy side and sell side, right? And knowing, the points or knowing signatures that you can attach or a checklist that you can attach to, oh, the market is turning away from buy side now to sell side and sell side now to buy side is one of the biggest things you can do when it comes to technical analysis, right? And we're going to be looking at one of the very major ones in here. And I'm going to be using a case study today to explain that. So now, when it comes to SMT divergence is one of the strongest or one of the major confluences to determine a trend change. Like when SMT divergence happens, like it's different, right? SMT divergence doesn't need to happen for a trend change to happen. Get that, right? But when it happens, especially at specific points, which I'm going to show you here, right? It then exposes that, oh yeah, there's about to be a turn, right? There's about to be, a market direction. And SMT divergence starts from the understanding of interconnected markets, right? To properly understand a particular asset class, right, you need to understand its family. So every asset class has a family. Every asset class is dependent on another asset class. Even the dollar is dependent on the treasuries. So you know the formula, or you know the family of GU, EU, DXY. You would notice that to understand GU or EU properly, you need to have some ideation, you need to have some understanding about GU, right? About EU and DXY. You have to have, you just have to have that rounded understanding to be better. Right now, starting out, you might not think about this so much, but as you grow your knowledge of understanding price, you start to understand that in getting precision or in having a much more clarity, to what you want to do with an asset class, right? You need to understand what its family is doing, right? It could give you a lot more clarity, to what you want to do on this particular asset class. And this is where, SMT divergence comes in. And this is the importance of, reading the tape in terms of interconnected markets. Now, we do not just have GUEUDXY. There's also NUAUDXY. We have USD CHF, USD JPY. We have the dollar. We see that the dollar is in the center of all of these asset classes that I've called, because those are the 7 major asset classes, right? But aside from the major assets, right, we also have what we call the crosses. The crosses are the assets or these same assets, but without the dollar in it, right? So they are called the minor assets also, right? And they're just, pairs, crossed pairs, right, without the dollar in it. So we have pairs like GBP AUD, we have Euro AUD, we have Euro JPY, we have, GBP JPY, and so on and so forth, like that, right? And it's the same thing, right? If I'm going to understand GBP AUD, I need to understand what Euro AUD is doing. I need to understand what AUD USD is doing. If I have a good understanding of that, that can shape what I want to see, in terms of this pair, right? Now, the reason why I'm talking about the crosses today is one of the things that you want to understand when the dollar is consolidating is we would see the crosses, deliver expansion. So if you look through this week where we've seen the dollar, a little bit sluggish, we would see a pair like GA, expand. We would also see a pair like EA expand. Right. And this just gives you, an insight to that. But that's not what we're talking about. So we're talking about how do I spot the SMT divergence, in how do I spot the SMT divergence for a reversal on the higher time frame, right? So there are 3 things. The first thing you want to know for the SMT divergence is look for the SMT divergence on the higher time frame. Forget what happens on the lower time frames. I would say daily for max, you can go for the 4-hour time frame, but I like to stick to the daily. right? So higher time frame is the first thing you want to think about when you're thinking about SMT divergence. The second thing is think about the SMT divergence after price been has been in one direction for a long period of time. Right now, a long period of time could be subjective. This could be, two days. This could be 2 weeks. This could be 4 weeks. This could be 5 months. Right. But you have an understanding of what I'm saying. Price has been trending in one direction for quite some time, right? And then you see the divergence. These are, valid SMT divergence, right? One of the things that I prime in my teaching, or I want to, really, really embody in my teaching, is bringing out the validity of these concepts, right? Painting them out so that, the noise is being shifted away and we can really focus on the exact things, that are needed, right, to spot the high probability, occurrences of these models, right? So higher time frame is the first thing you want to think about when you're thinking about SMT divergence. The second thing is price has been extending, or price has been moving in a direction for quite some time, right? The retailers will call that overbought situations for buys or oversold situations for sales, right? The third thing you want to think about is timing. When is this SMT divergence happening? Right. One, it has to happen in a session. Two, right, most importantly, the SMT divergence cannot be that one of the pairs is running out buy side liquidity at this particular time and the other one is doing it at a later time. They have to be doing it at the same time. Right, the divergence has to be occurring with the interconnected pairs, with the family at the same time. Right. So let's look at the case study as we just, go through it. Right. So now I'm sure I've done videos on SMT divergence, so you can check up on that. I'm really, really just making it, into this case study so that you can see this. So now if we look at Euro AUD, we would agree the price has been trending, right, for quite some time. Right. And that's one of the checklists for spotting an SMT divergence. Price has been trending for a while, right? We saw price take out sell side liquidity, expand, use fair value gaps, and start to just sweep our old lows. So buy side here. Now, its family, which is GBP AUD, also has been doing what? Expanding for quite some time. Now, one of the things to do here is, as a day trader, as price starts to expand and gets into higher time frame levels, or gets into premium, pardon me, right? This is high, this is low, right? So as price starts to get into premium, you want to be very, very careful, because inside of here, right, one of the days most essentially would want to print a sell candle in terms of the daily, would want to be, there's going to be some type of retracement, because now we're returning back into premium. Now, yes, this is going to be the draw, right? But as we start to approach premium levels, we are in low probability to keep buying here, right? Now, if I'm in a trade from down here, it's okay to ride price, up all the way inside of here, right? Holding it up, probably I take partials here. The way I do my thing is, if I'm buying down here in discounts, which I like to do, as price starts to approach premium prices, I'm taking partials. And if this is my expected draw, I want to see my runner do that. I'm back to break even, not losing money on the trade, and I want to see price just expand. Right. And for analysis sake, if I'm at premium levels, the last thing I want to start to do is seek for buyers. And I would say something. I would say, if it continues to go higher without me, I'm fine. If I would need to do anything, I would start to look for signatures for seeking short-term sales. Now, that might seem like, oh, me, you're counter trending, you shouldn't counter trend and all of that. Everything requires context. Because what you might see as a counter trend could be the beginning of another leg of expansion in the other direction. Right. So I want to teach you, how am I able to spot, oh, this is what is happening here that would be, high probability for me to be selling up in here, when everybody will be thinking about this equal lows, and it is the SMT divergence. So now we would see GA in here, right? We will see GA formed or printed a bullish candle, an engulfing bullish candle yesterday, Wednesday. And today, right, what do we see? It's not done yet, but we see a sell candle, being formed, right, almost at the end of the day. and a sell candle has been printed, right? If we look at EA, we will find that EA also Wednesday prints a bullish candle, a bullish engulfing candle, right? But we see Thursday also prints, a sell candle. I'm sure you can start to spot the divergence already. Now, for EA, Wednesday, right? Wednesday's high was run out. So we see a run on Wednesday's high by Thursday's high for Euro AUD, right? And for GBP AUD, pound AUD, we would see that Thursday's high failed to run out Wednesday's high. So clearly that's a divergence. So now we've already discovered the divergence on the higher time frame. Now you might ask, how do I know this is a divergence before all of this plays out? Timing. So I said the first one, we're thinking about higher time frame, which is what we want to see. We're thinking about an overextension, right? We're thinking about an overextension of we're thinking about an extension in one direction, or an overbought situation, or price moving inside of one direction. You can attach so many things to that. Price being in premium, price being in discounts. All of those things are things you want to think about. And I'm going to show you just this one example, but I want you to go back into your notes and then figure out more examples that then solidify the concepts to you. And the last thing is timing. So if we go down into the lower time frames, which is where we're going to be doing the business, right, you would find that very quickly in London session, right? If you think about this, that high was formed in London session. This was, wrapping up London session. That high that was formed, 545 for GA. If we go to EA and look at what that high is, right? If we look at what that high is, right, 345, right, we have 445, we have 4 o'clock here. I'm looking for 545 exactly. All right. So you'd see that if we look at 545's high inside of here, right, by 545's high, EA already ran out the previous day's high. Right. Even now, as early as 345, right, we can see that EA has run out buy side liquidity. The previous day's high has been taken out. So if we go back to check GA for 345, we'll find out that GA 345 was still hanging inside of here, right? This is 345 here, right? It was still hanging inside of here. Why? The previous day's high is still kept. We still see that, there's still a lower high being formed from the previous day's high. Now, this is what timing is, that inside of the session, right, inside of the London session, as any of these pairs run out buy side liquidity, that's what you want to think about. As any of these pairs run out buy side liquidity, or as it run out sell side liquidity, right? Because again, I want to be trading these two pairs and I'm looking at them, before I get my entry model, right? I don't know what price is doing. Let's say that. I don't know what price is doing yet, but I'm not trying to buy because we're premium. So I'm watching price, right? Price is expanding inside of here. There's a whole lot of things, but I want to just focus on SMT divergence now. Now, price starts to expand to take out buy side liquidity. That's good for sell side because we've opened on the day. We are running above the opening price. We're running above Asia's high. These are reasons to think about sell side, because how would a bearish candle print? It would open, go higher, then close lower. So all of this starts to happen. But now the extra confluence, right, which is the SMT divergence, is as all of that is happening, we're seeing a much more expansive run on this other asset class EA to take out the previous day's high. And as much as Asia's high is a liquidity run, or a point of liquidity to expect switch or change in market structure or a reversal to happen, the previous day's high is a much more higher margin. Right. So if you are looking for a very, very, very good premium, it is price running out Asia's high and the previous day's high. I like scenarios like this. Price is not just taking out the Asia's high, but taking out the previous day's high. But now this has constituted a divergence, an SMT divergence, where previous day's high, Wednesday's high is run out here, right? For GA, we are seeing that Wednesday's high is not run out. So if you can decipher that on the session, right, all you need to do next after discovering an SMT divergence, when you discover an SMT divergence, this doesn't mean going right there and sell. No, every single time we discover that a high or a low is being formed, we need to do one more thing, right, which is to validate that, oh, this is really happening. And you can only do that by doing one thing. It's called breaking market structure, which would be that we want to see, in just plain terms, we want to see consecutive candles moving in one direction, closing below an old low. So that's a swing low. We see price closing below an old low. Now, when this starts to happen, it is showing you that, oh, sell side is now in play. This is what this is showing you. The sell side is now in play. Right. Now, this is what gets you to put money on the table and say, okay, if sell size is in play, what are the virtues, or I'm using virtues, but what are the behaviors of a sell side market structure? And that is really, really, really simple. It's the first things we learned. It is all close candles will send price lower. We would see higher lows, or would see lower lows, lower highs, right? Lower lows, lower highs. Those will be the things of, or those will be the behavioral patterns of a bearish market structure. So what do we have? We have, if we have noticed that this is sell side, this is a breaking market structure, what do I want to start to look for? For entry protocols, up close candles will send price lower. Then you refer back to the idea of order block. That's where order blocks come from. That up close candles will send price lower. You want to think about the order blocks, in the upper part of the range, right? If you watched my video on YouTube, which I feel you should watch, if you're still having problem deciphering, valid order blocks, then you should really, really check that out, right? Probably I'll send out the link again, after this video, so you can watch that, right? But this is it, right? One of the checklist is we want to see price, or want to see the order block come from a support level like a fair value gap. I said I love to see it come from a fair value gap, right? The OB from a valid fair value gap is a valid order block. You can write that down. So we have a breaking market structure, or we have a displacement, which also confirms that this is a valid order block, closes below an old low, breaking market structure, has a fair value gap. All of these things are what, a valid order block really signifies. So it means that we have an entry protocol for this asset class called GA. Now, you would see that the work has been done before New York session. Before New York session is when you deciphered that there's a trend change already. So when you think about divergence, it doesn't mean that when the divergence happens, you need to be there right immediately it happens. You just need to know that it has happened, and then you now confirm or look for, PDRAs that match the directional bias that is now in play. A divergence is really just saying that what we've been doing before we spotted the divergence up here, right? We're going to do the opposite of that. So we spotted the divergence here that, oh, around this time, right, 5:45, right, by this time, EA already took out the previous day's high. So if by 5:45, GA is failing to take out previous day's high, then there's something up, right? So now for this, we have order block set up. Now, you might want to do this, right? This is something like I'm going to do, but for this is exactly how I'm going to take the trade, but you can really just extend it to cover up that fair value gap, just for completeness sake, and to just be a little bit safe. Sometimes we can have a week above that high and still go lower, right? But it's the order block setup we're trading, so a few pips above that order block is just fine, right? And this is a 1 2 3 clean. Now that's for GA, but that's not the only thing we have to be trading, right? We also have EA. So when it comes to choosing interconnected markets, I've said so many times that it just depends on what you want to do, right? Trying to think about which one is going to expand today and which one is going to expand tomorrow. It's a thing. I can teach you how to do it, but I would say you don't want to spend so much time thinking about that, right? At the end of the day, you're going to get into place where price is going to consolidate, even though you have all of the analysis complete, right? And some days it's just going to trend. So you're just going to choose one. And many times you see these interconnected pairs move in the same direction. One might just be more than one. But again, risk to reward, percentage-wise management is what we think about, rather than how fast price moves. right? A 20 pip move can still give you a 1 to 5 if you are risking 4 pips for the stop loss. Do you understand? Right. So yes, this already formed again the high, right? So we're waiting again, the same thing, breaking market structure, consecutive candles that close below an old low. It does that. I like that to be done on the 15 minutes. And you will see this is the example that I want to talk about a bit, right? So you would see that if you had your stop loss just around above that OB, this is a valid OB also, right? If you had it just above the OB, you probably be tagged, right? So again, you want to make sure that you're making allowance, especially when you have, up close candles, especially in the range like this, you could return, all of that buy side to that high. Remember, this is the high that was being formed, right, to start the divergence. Now, this is the quotes pair, as it's always said, right? The pair that doesn't need to take out buy side liquidity is the one ready to move, right? So this is still more likely to take out buy side liquidity inside of the tape than this. But what we don't want to see is it cannot go back to take out the divergence high. Right, so it returns back into that OB inside of there, right? Has some there, 21 pips is a lot. I'm not sure I would use 21 pips. So I'll probably be using, something above that order block, a few pips above that order block. Max, I'll be respecting that tiny OB also. 14 pips is not bad. And this is a lot more smoother. I would like if I would have been looking at this, to really this is trend line or low resistance liquidity run, simply put. And you can aim for certain things to be very modest with a model that I've taught the community, which is run above Asia's high, breaking market structure, aim for Asia's low. Very, very simple. You can just apply this every single time without thinking, and you're going to have more wins than losses if you just follow this judiciously, doing nothing else, right? Think about run above Asia's high, breaking market structure, getting. You will take some losses, but we all take losses, right? Even today, I took a loss on buying gold, right? Even though gold still later ran into buy side. So forget about taking losses. Think about following a proven system, right? So if you're just doing that, you have those lows, and that will still be a 1 to 2.7, right? But if you're playing the big leagues, right, going back into those porous ranges, inside of that fair value gap, you have a much more bigger risk to reward, right? It doesn't really matter the risk to reward, it matters the performance, the planning, and the executions of the plan, right? So I hope you've been able to get some insights from this. Yeah, that's going to be everything. If you're looking to join the inner circle, then a link is going to be provided, or you can just text me privately and we can talk, right? And I'm also taking one-on-one mentorship students. It's been a while, not a while, but I was working with a bit of people, so I had to really just focus. And now I'm a bit free. We can really, really do numbers. If you've talked to the guys that I've worked with before, they can kind of give you an experience on, what is like. And, you can really just see for yourself. We can get on a call and we talk numbers. All right, guys, I'll catch you in the next one. Stay safe. Have a good weekend. Bless up, family.